I'm going to go through one more question on the internal control and cash, and this time we're going to look at Adams Inc. We're going to look at doing a bank reconciliation. In this question, we're also going to take a look at some weaknesses in the control activities. So we would like to identify them, and there's also some fraud involved in this question, which we're given an idea about, again, the purpose of doing the bank reconciliations. So let's take a look at the question about Adams Inc. Adams Inc. is a small, privately owned company, and they have been profitable. And because of the high growth, the company has not been given a lot of consideration to the internal control. And in order for them to control expenses, they always keep a very minimum amount of staff. The company has combined the job of a cashier and accountant together. As a result, Nancy, who is the accountant, she handles all the cash receipts, she keeps the accounting records, and she prepares the monthly bank reconciliation as well. So they tell you that the balance per bank statement on June 30th, 2013 was $27,310. Was $27,310. This is what they have done here. And they said the outstanding checks they gave you the 4 checks that were actually outstanding and the amounts. And there's also one deposit outstanding. If you take a look at the schedule below, you will see that. And including in the bank statement was a notification of $450 electronic collection on an account from a customer. So if you take a look at a schedule, which they have given it to you here, you will see that this is the electronic deposit they have actually referred to in the reconciliation. And then in the bank side, this is the $27,310 as the bank statement that they have received. This is the deposit in transit they referred to and the outstanding checks here. So the first question they ask you to do is to identify any error in the above bank reconciliations. That's one thing. And you need to prepare bank reconciliation. You will also need to identify how much Nancy might have stolen from the company for the personal use, and indicate the ways that Nancy tried to hide the theft and the dollar amount. And the last thing is, we would like to know what kind of suggestion you might have to improve the control activities that are being violated in this case. So let's quickly take a look at the bank reconciliation that Nancy has done. Yes, you can see that the electronic collection from the customer, rather than adding it back to the book for the cash balance, she has actually subtracted it. So that's one error that she would have made, or she may have done it intentionally for the fraud. And the other thing you'll probably realize is the fact that the outstanding check amount that was actually listed here are different than the ones that you have actually discovered. As an example, if we go through it, check 262 is at 254 here. This one ties back to what they have given you. But check 283, they have $216 recorded here, but it should have been $360. And 284 should have been 506. They recorded 470. And then for 286, the check amount should be 380, and they only recorded 218. So 3 out of the 4 checks they have put in the wrong account for the outstanding checks. So these are the errors that she has done in performing her bank reconciliation. So let's do a correct bank reconciliation based on the information that was given to you. And again, this is the bank reconciliation that Nancy has given it to you, so we can actually build from here. So let's start with the bank here. So if we take the cash balance from the bank, so if we do a bank reconciliation here for the Adams company, and again for the period for June 30th, okay. So we have the balance let's start with the bank. So the balance per bank statement, as what we have got here, is $27,310, and we would add the deposit in transit, which again they've given you that information as well, which is $80.80. So the total amount of cash they should have in the bank before any adjustments, any other adjustments, would be $35,390. So let's take a look at the outstanding checks. As you know that there's errors in this area, so we do need to put in the correct amount. So if we go take a look at those check number, so the check number is 262, 283, 284, and 286. Those are the 4 checks that were given. And the amount, as we went through earlier, that we were talking about here, it should be $254. And that should be that should be $360. That should be $506. And the last one should be $380. This is what the information that you have found, and that should be the amount that should be shown here. So the total outstanding checks amount should be $1,500. So the adjusted cash balance per bank statement should have been $33,890. That's what you should be accounting for as the reconciling balance for the bank. So let's take a look at the book side. Again, we know that the amount should be, from the book side, we are starting with $34,682. That's what we have started. And we need to add, not subtract, the electronic transfer from the bank, which is $450 here. So my subtotal is $35,132. And then we need to account for the any adjustments that we have. Now, basically speaking, there are no other adjustments that we are aware of that needs to be corrected. So basically speaking, that should be the balance that we should have in the book, that we should have accounted for in the book. However, in the bank balance, we're only showing $33,890. So the difference between this amount and that amount is probably would be the theft that Nancy has committed. So if we actually take a look at the reconciled, the adjusted cash balance per bank, we should actually only have $33,890. So the difference is really what Nancy would have taken for her own use. So she has actually stolen $1,242. The question asks you about how do you make up the $1,242, but basically, as we discussed earlier, the main thing that she has done to hide this theft is, one is the EFT collection, because she has actually recorded it as a deduction from deposit rather than a adding to the cash account. So the EFT collection, she has actually understating that amount by basically $900, because she should have added it, but she has subtracted it. And then on top of it, in terms of the outstanding checks, she should have deducted $1,500, but yet she has only shown the outstanding checks as $1,158. So she is understating the amount of outstanding checks by basically $342. So this makes up the total of $1,242. So the last question they ask you is, what are the things you can do to help prevent this thing from happening? The key thing is definitely, as we discussed before, we should definitely focus on the segregation of duties. So basically speaking, we should not have Nancy basically doing all the checking of cash and then also preparing all the accounting records and doing all the bank reconciliation. We should have a different person who looks after all the checking of the cash, and then we should have the different person that are actually depositing the amounts into the bank and then doing the bank reconciliation and recording them. Again, this concludes the discussion of this question, and thank you.